Hey, it's David Cherry. This is Founder Therapy, helping driven entrepreneurs build better lives and bigger businesses. Today, I want to talk about a mistake that many early stage founders make related to raising capital and why the best investor is oftentimes your customer. Now, when your runway is shrinking and the company running out of capital, you start to say to yourself, gee, it'd be really nice if we had some buffer. It'd be really nice if we had some runway. It'd really be nice if we had enough capital in the bank account that I could hire a few people and make certain things happen in my business. And that intention is a good intention. It's not something that you should necessarily shy away from because keeping your business alive is the number one business of the entrepreneur. The problem starts to happen when businesses become over-reliant on using capital investment from investors to paper over changes in growth that could be happening with your customers. And we need to remember that when you sell to an investor, when you package up your business to bring it to market and offer it to an investor, you're actually selling to a different customer segment. You're selling to an investor, to an angel investor, to an institutional investor, to friends and family. You're packaging up your business and trying to sell them the vision so that you can get capital to continue to build. And that means you're putting yourself in a relationship with a different type of customer. This type of customer has different needs, different desires, different wants, different expectations of you. Oftentimes, raising money is actually more similar to hiring a boss for yourself. Now, that can be a good thing. When you hire an investor to not only invest in your company, but create some expectations around what that investment means, it can be very helpful to prompt you and put you in the right incentive structure to create a good outcome, to create a good result. When you hire a venture capitalist, essentially what you're doing is hiring them to put you on a rocket ship, to put you on the need to hit this really big outcome. That's part of what the investor is for. The money is nice and the money supports that, but it also puts you in the right incentive structure. So what I want to talk with you about today is how if you seek out investment as an alternative to seeking out customers, you're putting yourself in a different incentive structure. You're selling a different product. So the choice that you have as an entrepreneur is, should I spend my time and effort going to a market of investors to sell them a product, which is the opportunity in my business, to hire them to be partners, to hire them to hold me accountable to the type of growth that I want? Or should I go to market and seek out customers to essentially have my product actually fund the runway that I'm seeking to extend? Now, my posit here is that while certain businesses do need a lot of capital to get off the ground, if you're starting a hardware robotics company, you need millions of dollars of capital just to get your product to market. And so fundraising completely aligns with that incentive structure. But if you're an independent business owner who is seeking outside capital because you haven't yet been able to create the sales that you want, it's possible that you're just delaying getting customers through the process of fundraising. Now, the problem for the entrepreneur is equity in your company today is cheap, but in the future is very expensive. At the earliest stage of a business, it feels like the equity is not worth as much, but as the business grows, the equity as the business grows is worth more. Because of this, it's more alluring to make off this short-term trade of giving up some of the equity now because it doesn't feel like it's worth as much. But it's your job to consider the full weight of what that equity could be worth down the road in the future. So raising money from an investor versus raising money from your customers, when you raise money from your customers, you now have a lot more alignment. You are doing the thing that your business set out to do. You're solving a real problem for the customers you're seeking to serve. And you're in the right and proper alignment of incentives instantly, where you provide them a service or good and then they pay you. Every time you make a sale, you're not having any dilution. So when you sell to a customer instead of an investor, you're not diluting the equity and you're not diluting your ownership in the company. And instead, you're actually earning more value for the equity you have by growing the company value through having a customer set. And you're also, and this is the most important thing, validating and creating proof that this business actually works today. And it's evidence that this is something that can be viable. So before you go off to raise money, ask yourself, could I actually create some of this runway for myself by raising money from my customers? And actually, Kickstarter really figured out this model that why not let these goods sell to their customers through crowdfunding ahead of time so that you can lock in your customers and use them as investors. That's why that model works. So if you really see investors as partners, as a way to hire yourself into the right incentive system, then it might be the right idea for you. But if you're using that as a distraction from going to market and selling to customers, it might be better for you to wait, create some sales, and then let the investment pour gasoline on the fire rather than having the investment be the start of the fire. So I hope this helps you if you're an independent entrepreneur who's been thinking about fundraising or concerned about whether or not they should do that, just to get a lay of the land, to understand the landscape. And the best thing you can always do is raise money from your customers. I hope that helps. I create videos like this every week. So if you want to like, subscribe, or ask questions, I'm there in the comments. And I'll be back again with more videos like this very soon. Later.